Monday, September 25th, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at silver, and I want to do an update on a video that I did back in June entitled The Impending Silver Resource Extinction Crisis. Before I start, I'd like to talk a little bit about silver. Yes, there's a lot of frustration, and there's a lot of people who try to say that silver is useless, that it's going nowhere. But I think this historic teacup chart that we've had for over 40 years is a reflection of a major suppression of the silver price, especially since 1980. And why do I think that that is so? Well, because silver is money, and the powers that be can't let the price of silver go through the roof, because that reflects badly on the US dollar. The name dollar, of course, comes from originally the Joachim's Thaler, which was a popular silver coin in Europe in the 1500s, 1600s. Eventually the Spanish made a similar coin, and they called it the Spanish dollar. And then the dollar itself was a derivative of the Spanish dollar. And believe it or not, different silver coins from different countries were used in the US as money and currency up until the Civil War. Unfortunately, they brought about legal tender laws, which basically, took away the circulation of all those silver and gold coins from other parts of the world. That's the beauty of gold and silver. It doesn't matter where it's from, it's money, and you can use a Mexican coin, a Chinese coin, a Brazilian coin, anywhere in the world, or an American coin or a British coin. So yeah, the reason I started buying silver back in 03 was because I started with gold in 02, and then I looked into the system and realized silver is just as important, and it was at 1/10 of the price from 1980 at the time. And I think silver will still shine brightly, and I think patience is the main thing. And you might be asking, if you don't have silver, how do I buy silver? Well, there's many ways to buy silver. The first silver I bought was like a kilo bar, but here I've got a 50-ounce bar, which is called a bullion bar. It's an angle hard. You can buy these kinds of bars as well. There's 51-gram bars here. There's the Valcombi bar. You can of course buy the bullion coins. Here I have a silver eagle, 1 ounce, or you can buy a Britannia. And of course you can buy the constitutional silver, which is the pre-1965 90% silver coins from the US here. So a $50, a quarter, another $50 there. So that's the reason why the powers that be don't want the price of silver up, because back in 1964 that was 50 cents, and nowadays that's worth $10 fiat dollars. So there's many different ways to buy silver, and you should do your homework. And of course I have my affiliates in the description if you're interested. And the other thing that I wanted to talk about today before we go on to the main topic of the video is that if you want to keep your valuables safe, there's now something called the Dirty Man Safe. It's a simple and easy way to protect your valuables. So I highly recommend you look into that. The details for this product are below in the description. And if you use my promo code Monaco10, you get 10% off. So back to silver and gold to some extent, but we're going to focus on silver today because we've seen in the last week or two that there's a huge premium for silver and also for gold, but it's a smaller premium in the Shanghai Futures Exchange. I think earlier last week, the price of silver in Shanghai, if you translated it from their domestic Chinese currency to the dollar, was over 10%. I think it's dropped now to around 7%. So I'm not surprised by that, because I've been following Bai Xiaojun on Twitter, and he's an analyst, a silver analyst out of China, and you can follow him. He's Bai Xiaojun, so it's at Oriental_Ghost, and he's been covering all this topic of silver and gold to some extent for months. And back in June, I saw one of the articles he published, actually back in 2021, and it was entitled Impending Eruption Crisis, Silver Extinction. And I'm going to go through the article fairly quickly, but if you want to read the whole thing, I recommend you go onto my blog. I have a blog where I post not very regularly, but I do. It's called Moneko64.net, and that piece of research is there as a PDF file. It's the article is the Impending Eruption Crisis. I'm going to put a link to it in the description. You can read the whole thing. So this is what he's been saying, and the reason why I want to do an update is because Tavi Costa, who's a brilliant macro analyst, and I've had him on the channel. He's a portfolio manager at Crescat Capital in the US. He just tweeted a few days ago, he said, Mexico just reported its steepest decline in annual production of silver in 4 years, which is notably worse than during the COVID lockdowns. Let us not forget, this is by far the largest producer of the metal in the world today. The supply of silver remains remarkably constrained. And if this is indeed the beginning of another gold cycle, the metal could be worth multiples of its current price. So there you can see the silver, Mexico silver production. That is important in the context of what I'm going to talk about today. It's Xiaojun Bai's paper here from, well, exactly 2 years ago, actually, because it was written on September 25th. 2021, and today is September 25th, 2023. What a coincidence. Our concern, so he goes on to say, China is one of the world's 5 largest silver consumers, with an average annual silver demand of 6,300 tons in the last decade. According to the 2011-2020 data released by the U.S. Geological Survey, China's average annual silver mineral production is only 3,350 tons, and about 3,000 tons of supply gap depends on imports. The key point of our anxiety is that China's proven silver resource reserves. So what are resource reserves? Well, those are reserves that have been found by exploration companies that could be come out of the ground. They're not real like in bullion form reserves. They're ore, silver ore underground that they still need to explore and then put into production, right? So that's the difference. And the other thing Bai told me, I had a chat with him on Twitter some months ago, is that yes, there is a lot of silver overground, a lot of potential scrap silver, but he said at current prices, it's not very economical to recycle all that silver. So that's one of the problems as well. But let's continue. From this year, if the current mining rate would keep unchanged, there will be only 11 years of silver mining life. This was written in 2021. So by 2032, China's silver reserves will be exhausted and underground silver deposits will be extinct. There's a caveat here, of course, if the price starts rising to multiples, as Tavi Costa said there in his tweet, we could see a lot more exploration and those resources could increase. But I would say that right now it's not worth it. You look at the silver mining companies, they're not doing very well. From 2033, 6,300 tons of China's static silver demand will all rely on imports, and the relationship between global silver supply and demand will be worse dramatically. Our concern is also the world's concern. According to the data released by the USGS, is the Geological Survey of the US, the global silver production was 25,000 tons and the reserves was 500,000 tons in 2020. According to the current mining speed, the underground silver resources would disappear in 20 years. Mine output would be reduced to zero. The situation in Mexico, there we go, is more serious. Mexico is currently the country with the highest silver production in the world, with an average annual output of 5,600 tons in the last decade, and only 37,000 tons of resource reserves by 2020. According to the current mining rate, the mine will be exhausted by the end of 2026, and the output will be reduced to zero. The panic of silver crisis is only 5 years away. So that's 3 years now. This was 2 years ago, of course. I'm going to stop with this paper right here. You can read the whole thing if you go onto my blog, and I'm going to put a link to the article below in the description. But he also talks about other countries that have silver resources, like Poland, Australia. They have a lot of years of resources left. But the only problem is that these resources are underground and they haven't been explored or produced. And yes, a higher price would probably bring a lot more resources into the market. But in the meantime, the situation is precarious. And I think looking at the price of silver, technically, this is what that generational teacup is telling us, that something's brewing in the market, and pretty soon the price is going to explode. And yeah, you might think it won't, and that's fine. But even if it doesn't, I still want to hold my silver because it's precious and it's worth a lot more than a promise from a central bank or from a bank, which is what we have in terms of money these days, or currency. And the other thing I would say in the short term, I've talked about this triangle formation here in silver that's been developing in the last year and a half or so, or even more, since the silver squeeze movement in 2021. And it's getting tighter and tighter, the apex. We're getting closer to the apex of the triangle. And it's going to go either explode higher or lower. My bet, of course, is that it will go higher. And why do I say that fundamentally? Well, there's this resource extinction problem. And there's also the fundamentals in that we're up to here in debt, not just in the West, but everywhere around the world. We've got stagflation, the economies in the West. We've been addicted to low interest rates, and that's eviscerated our economies. It's kept zombie companies in business. It's allowed governments to get bigger and bigger, which crowds out the private sector. So all the fundamentals that we had of stagflation are there. Just like in the 70s. Yeah, the situation, I would say, is even worse than the 70s because there wasn't as much debt or leverage as there is today back in the 70s. So yeah, my money, my bet is that silver will continue to do well. And so with that, let's quickly look at where the markets are then this morning. It's 8:40 a.m. London time. So we've got spot gold trading at 1924. That's down just over $1. The high's been 27 and the low's been 20. Spot silver, we're trading at 23.56. It's up a couple of cents. Yes, it's quiet right now. High's been 66 and the low has been 23.40. The Dow futures is up 118. The Nasdaq is up 67 and the S&P is up 16. To the currencies, sterling is unchanged, 122.40. The euro is down slightly, 106.40. The dollar is unchanged versus the yen, 148.40. The dollar is up 0.2 versus the yuan at 731.27. Let's check out the dollar versus the ruble. We're trading just below 96, so it's pretty much unchanged. Talking about the ruble and Russia, there's a story out in the mainstream financial press in the West that, not surprisingly, Russia's been able to circumvent the oil kind of price limit that the West put through sanctions. And the sanctions involved saying that if the Russians were going to ensure the shipments of oil, they could only charge $60. And the idea here from the geniuses from the West was that Russia wouldn't find a way to ensure or ship the oil outside the Western insurance system, which they used to. And lo and behold, they found a way. And now 3/4 of their oil are being shipped outside the Western insurance system. So they're benefiting greatly from the higher price of oil. So that's what's going on there. The Russian economy is still doing quite well, I think. And I'm not like trying to praise anyone. I'm just giving you the facts. Let's go to the other currencies here. We've got the Aussie dollar down 0.25% at 64.22. The dollar is unchanged versus the Canadian dollar on 34.73. And talking about Canada, I did see what happened in the Canadian Parliament. I think it's pretty amazing and not disgusting, really. I won't say more about it because you probably know what I'm talking about. And if you don't know, look it up. So the Kiwi dollar is down just about 0.2. Yeah, trading at 59.50. So let's check out the general commodities. We got WTI crude up 0.6%, trading at 90.32. Brent is also up 0.2%, 92.75. We got platinum down a couple of bucks, trading at 927. And high-grade copper is down 0.2, trading just below 370. To finish off, let's quickly look at the bond markets. The 10-year yield is up just under 4 basis points, trading at 4.47. The UK 2-year note yield, the 2-year UK gilt yield, is at 4.85, and the 30-year is at 4.77. So with that, I'm going to wish you all a very good start to the week. Take care. Bye.